Hey guys, how's it going? Option Sniper here with the Santarelli Exchange. If you're new to watching this channel, please follow the link in our comments section, in our description section of this video. We offer a free month to every new member. At our site, we have a live chat, we have a live trade feed, and we have educational videos weekly where we teach members how the most optimal way to trade options and maximize profits weekly. And also we give, longer term trades, and we do a lot during earnings season as well, and we're getting ready for this upcoming earnings season that's in July. So check that link out in the description section of this video. And today we're going to talk about important components of options. I've seen some questions about people asking about why I say it's a good idea to keep your delta at a 50 or above, and expiration date better to go out longer, as in 30 days plus. I've seen some questions on that, and so we're gonna talk more about kind of the nuts and bolts of options today, not really look at charts as much today. Let's do that. But real quick first, on these weekly videos on Sundays, I always make sure that we're aware of any key things in the upcoming week. Okay, that's very important. So before we get into the kind of more technical things with options, I'm just going to talk real quick about the economic calendar for this week, which is something that's always very important to be aware of. As you can see, there's nothing really pressing for this week. Okay, last Friday we had non-farm payroll. That number came in a lot worse than expected, which was really surprising because the ADP number was a lot higher than expected. So there was a huge difference there between the two. And the market was kind of flat on Friday. We did close at all-time highs on Thursday. So overall, the market does, still look attractive, and we are in a bull trend. The really important thing every week now, with oil being the way it is every Friday we get this number here, the Baker Hughes rig count. Rig counts have actually been rising for like 20 weeks in a row, and that is a bad thing for oil, right? With rig counts rising, that leads to a higher supply of oil. All things being equal, assuming that demand stays the same, when supply goes higher, that is going to cause oil prices to go lower. Okay, commodities are all supply and demand. That's why we've seen more weakness in oil these past couple weeks. Oil's, hanging around that 47 level is really a key level for oil. So yeah, and the most important thing this week, not on this economic calendar, is James Comey is testifying on June 8th, which is this Thursday at 10 Eastern Standard Time. That really has potential to move the market. We all remember last time Comey came out and talked about what Trump did with Flynn, and how he talked to him about easing off investigations with Flynn, or whatever that controversy was. But when Comey came out and said that, it caused the market to sell off. Huge. S&P went down 40 points. The market was down almost 2% that day. That was the biggest move we had in about 7 months. That was, I believe, 2 weeks ago. It was just a one-day big move down, and we've rallied since. But Comey does have the potential to really move the market, like we saw 2 weeks ago. Is my point with that? He's talking on June 8th at 10 Eastern Standard Time. Okay, so that's the big thing upcoming this week that has the potential to have an impact on the markets. Now let's exit out of this. Just real quick, I know I said we weren't going to look at charts much, but it's always important to look at the S&P. We'll take like 3 minutes just to look at the S&P and where it closed. So we see we finished at all-time highs again on Friday, 23.49, and then also at the end of every week we should be looking at the weekly time frame as well. And we've now had 2 straight weeks where we closed above the previous week's high, and we are definitely in an uptrend, strong market. We should assume that the S&P can hit 2,500 here in the next couple weeks, but like I said, the one kind of obstacle to that is Comey testifying on Thursday. Now, it's not guaranteed that anything that he says is going to have an impact on the market, but there's potential. Okay, it's possible that the market could not care at all. We could just keep rallying and keep making higher highs, and that's always possible. And one other thing that you see a lot with the market is, and that's all really we're probably going to look at for charts today. Those two things, always important to look at the S&P. But one thing that you always see, that you see a lot with the market, not always, because nothing always happens, but one thing that you see often with the market is that the trend, the short-term trend of the market kind of determines how the market's going to react to news a lot of the time. Meaning, when the market's acting very bullish, prices are continuing to rise. Sometimes news that you would think the market would react negatively to, it reacts positively to. It just, and actually, very interesting, one of my favorite books I've ever read, Reminiscence of a Stock Operator by Jesse Livermore. He talks about this even like 60, 70 years ago this was the case, and I noticed that a lot still to this day. Whereas like the current condition of the market, how prices are acting, determines more how the market digests news. So it's just something to keep in the back of your minds. Where the market is so strong right now, there's potential that no matter what Comey says, the market could react positively to it just because of the conditions. So basically, yeah, I mean, we need to be aware of Comey because, like I said a couple weeks ago, he caused the market to sell off. But the market is a lot different now than it was 2 weeks ago, okay? 2 weeks ago, we were struggling to get above that 2,400 level. And we're at a point now where we just busted through 2,400, and we've been very strong. And we actually saw it last week. If you guys want some good technical analysis, go back to the video I made last Thursday on this channel. We talked a lot about sector rotation, okay? We saw a lot of sector rotation on Thursday. The laggards of 2017 had huge moves on Thursday, which caused the market to close at all-time highs, and we saw that continuation into Friday, okay? The weak sectors being retail, small caps, and biotech. Those sectors saw strength on Thursday. Biotech saw continued strength on Friday. Retail was a little bit weaker on Friday, but yeah, that trend, if that trend continues, we can definitely expect the market to continue to all-time highs, and that's the kind of sector rotation that is good to see in a market that's making the next leg up, because that's breadth widening, which definitely helps. The market makes it easier for the market to go to all-time highs, right? So, yeah, I mean, if you look at small caps, just real quick, this is the weekly chart. First week we closed above the previous week's high in a while. But if you look at the daily chart, Thursday and Friday, big moves up, okay? And it's likely next week we're probably going to breach this 141 level on the IWM. And that is going to be, if the IWM finally breaks out to all-time highs, starts trending up, that is a very, very, very constructive, good sign for the market, okay? And it'll make it even easier for the S&P to get to 2,500 if we see small caps and everything else pick up. So yeah, I try to. I'm trying today to talk to. We're just gonna not really look at charts that much, but I love charts and technical analysis, so I can't really go any video without looking at least the S&P and kind of what's going on in the market. It's good for everyone to always be aware of that, and I think no matter what, when we're doing technical analysis, I think there's always teaching points. So yeah, that's kind of the big picture and what happened this week and what we should be aware of going into this week. And now we're gonna go in and I'm gonna talk more about why it's important to have your delta at a 50 plus. Why it's important to go out 30 plus days in expiration. And then another point here of why it's better to trade stocks with higher IVs. IV is implied volatility. Okay, and then it's why it's also better to trade stocks with lower floats, meaning lower amounts of shares outstanding. I actually created a screen today. It's a great option trading screen that I want to share with you guys. I can walk you guys through how to make that on TD Ameritrade Thinkorswim's platform. And so yeah, we have some interesting things to talk about today. I'm going to show you guys right now. So why is it important to have a minimum 50 delta? Okay, I'm going to give you guys just a perfect example here of why I try and drive that home. Okay, so what we have here is this is the option chain on Amazon. Expiration June 9th, which is this week, right? These are the weeklies. Okay, in this option chain, I have delta, implied volatility, open interest, volume, theta, and probability of this option being out of the money at expiration. Okay, that's what this prob O is. This is probability of the option being out of the money at expiration. When an option is out of the money at expiration, that means it expires worthless. Okay, and for the 10-10 put on Amazon to be out of the money on June 9th, Amazon has to be above 10-10. Okay, that's what out of the money means, right? For the 1005 call on Amazon to be out of the money on Friday, Amazon has to be below 1005 on Friday. Okay, so if we look at delta here, which is this column, okay, if we look at delta right, on the 1005 call on Amazon, a 54 delta on Amazon, this option still has a 46% chance of being out of the money, okay, even with the 54 delta. Now, if you take that down, you go a little bit. Do you see here how these cells are highlighted and these ones aren't? The highlighted ones mean these options are in the money, and the black ones mean the options out of the money currently. So this one's probably really close to being at the money, a little bit out of the money, the 1,750. And I mean, we can just look real quick and see the price of Amazon. I think I have it here. So yeah, Amazon closed at 1,673. Okay. So it's about $1 out of the money. Okay, these 1,750 calls are $1 out of the money. They have a 49 delta, and they have a 52% chance of being out of the money at expiration. Okay, it's better than a coin flip chance that this option is going to expire worthless. And Amazon's only $1 away from 1,750. There's still a 52% chance that this option finishes out of the money. Okay, that's what this probability out of the money. Now, obviously, the lower your delta is, the more the odds are stacked against you. Okay, look as you go down here. The smaller your delta, the higher the chance that this option expires out of the money. Okay, this is why I say, if you buy a 34 delta on Amazon this week, this option has almost a 70% chance of expiring worthless. Okay, this is why I say, if you keep your delta at a 50 or higher, ideally even a little higher, the odds are way more in your favor, right? I mean, look at this. If you buy a 34 delta, there's a 70% chance that this option that you buy is going to be worthless, okay? The odds are just stacked so against you. So that's why I say it's always best to keep your delta at a 50 or higher, okay? And now we're also going to look here at theta, okay? Theta is time decay. Theta is how much the value of these options decrease every day due to this option getting closer to the expiration date. Okay, that's what theta is, time decay. So this is the weekly options that expire June 9th. Theta is 49 cents. That's really big. And this number will continue to increase, right? This number will go from 49 to probably like, maybe even over $1 on Tuesday. Okay, this number just, on weeklies, this number continues to rise really, really fast. And 49 is pretty high. Now, on this next slide, I have options on Amazon that, you see this in parentheses? This means it's how many days till expiration? 33 days till expiration, these options. Where here we had 5 days, right? So 5 days from expiration, the theta was 49 on the 1005 call. And 30 days from expiration, the theta is 30 cents on a 1,005 call. Now that doesn't seem like a huge difference, but the main thing to keep in mind is that the theta on this option is going to increase a lot slower, right? So every day you get closer to expiration, if you're 33 days out, the theta is going to rise a lot slower, okay? Whereas on this one, the theta is 49. On Tuesday, the theta is probably going to be at least like 70, okay? And on this one, on Tuesday, the theta will probably only be like 30 or 31. So basically, why I say to go out 30 plus days in expiration is because you put the probabilities even more in your favor, okay? Your theta here is less, and your probability of being out of the money is less too. This is that column. These columns aren't labeled. But yeah, so that's why, in my opinion, okay? And it's not really my opinion. It's just kind of the way the numbers are stacked too, right? I mean, it's fact, okay? It's the higher your delta and the longer you go out in expiration, the higher the chance that the trade will work in your favor. The higher the chance that the trade will move in your favor and will be profitable at some point, okay? So this is why I say over and over and over again, and why I'll continue to say it, because I don't want people to make money management mistakes, okay? I want to help everybody. I will continue to say that you should not have more than ideally 3% of your account into weeklies options, right? Weeklies being options that expire this for upcoming Friday, June 9th. You should not have more than 3%. And if 3% is too small, I would say do everything you can to keep it at 5% or less, okay? 5% really being the absolute max, but ideally you want to get that to 3% as your account grows. And basically, you know, the higher percentage of your account that you hold in weeklies, especially overnight, because we're swing trading, so you're holding these positions overnight, the higher percentage of your account you're holding in weeklies overnight, the more you can make, okay? When the market's actually trending, it's easier to make that work. But what we saw, you know, the past 12 or 13 weeks before the past two was the market shop sideways, and that would have been a really bad strategy to hold weeklies overnight with the high percentage of your account. Now it's a little bit different. The market's trending. I would say it's a little safer to hold weeklies overnight, but I would still say ideally you want to be at 3%, a max of 5%, just because it's really risky to hold weeklies overnight, okay? And if you go out like here, 30 plus days, the odds are better in your favor. Obviously, the options are a little more expensive, but it's all about putting the odds in your favor, okay? It's all about, you want the probabilities working for you, not against you. And you can see here, even if you go out here, right? You go out 33 days. This is a 42 delta. This is a delta column. If you get a 42 delta on Amazon, out 33 days in expiration, there's still a 61% chance that these options expire out of the money, okay? So yeah, I mean, you see why I say if you keep your delta of 50 or above, you're going to be at the money or a little bit in the money at least, and the probability of this option being out of the money is only 49%, right, at a 53 delta. So that's why I say that stuff's so important. I've seen questions about it. I haven't really talked about it in a while. Delta and implied volatility. Okay, delta and implied volatility are the two most important things for all option traders to be aware of. And implied volatility is really the thing we care about the most, okay? Volatility is an option trader's best friend. The higher the higher the IV is on a stock, the more it's going to move, and meaning the more a stock's going to move, obviously, the more potential for profit there is. And that's why it's better to trade, all things being equal, it's better to trade stocks. It's better to trade options on stocks that have higher implied volatilities. Okay? Let's see if anyone has any questions. Wayne says, don't forget the British election on Thursday. Yep, that's right, Wayne. That could definitely have some potential to impact our market as well. I haven't really seen that in the news at all. So the market is definitely doesn't seem like the market cares that much about that, but it's definitely always important to be aware of any type of elections and all that stuff, right? So yeah, that's a good point by Wayne. I think Comey is definitely going to be the biggest thing of this week. Okay, that's this Thursday, June 8th at 10 Eastern, and let's keep rolling along here. Let's see what I did here. I think, okay, these are just, so this is an options chain of Amazon. This is the implied volatility column. You see, the implied volatility on Amazon is kind of low. Okay, ideally you want IV to be higher. It's not too low that you shouldn't be trading options on Amazon, but it is on the lower. It is on the lower side, and you can see here this is an option chain of win. It's definitely, obviously you can see wins a lot higher, but that's kind of why I put that in there. And let's see here. Okay, so now I'm going to show you guys this scan that I made. I'll show you guys a screenshot of it first, and then I can show you how I made it. And I can also show you guys how I set up my options chain to get it to customize for the way that I want it to be. I'll show you guys both of those things. But here's what I did here with this screener, okay? I've talked about a bunch of times in a bunch of different videos and in chat how beneficial it is to be involved with stocks that have a low float, meaning their shares outstanding number is low. I talked about this last video, the last video on Thursday. I showed you guys on FinViz where to see that, okay? But this screener that I made screens out all stocks that have more than 135.19 million shares outstanding, okay? So if a stock has more shares outstanding than 135 million, a little bit more than 135 million, they're not going to show up in this screen. Now, right away, that gives us a screen of stocks that have lower supply, okay? Shares outstanding, anything like 135 million or lower is very low. When you think of, for example, Apple, right? Apple has 5.5 billion shares outstanding. Okay, so stocks with low amount of shares outstanding, it's easier for them to move big because there's lower supply and it takes less buying or less selling to move it big in either direction. So this is something that the lower this number is, the better, right? The lower this number, the better, assuming the options are liquid enough to trade on the underlying of whatever this name is. It's just another way to screen for stocks that have potential to move big, and obviously big moves are what we're looking for as option traders. Of course, it's what you're looking for as any type of trader, but with options, obviously you want stocks that have the potential to move big. And so this is kind of a nice little screen here. Now, the other stuff I have here is volume, okay? Is at least 200,000 shares traded daily. I think that's a good little number, right? If the stock has less than 200,000 volume a day, it's really probably not going to have a lot of options on it anyways, and not really something we need to be involved with, in my opinion. Implied volatility, 18%, okay? Open interest, 2,000. What does this mean? This means there's at least 2,000 options open on these names. Okay, if there's less than 2,000 options open on the name, it's not going to show up. And I think 2,000 is kind of on the low side. The higher that number, the better. But I think 2,000 is enough to show that options are active enough in the name. Okay, so which is why I chose that number. Stock at least 5, priced at least 5. And so this gives you 416 names. I sorted the column by last price, right? So you get the higher, but you can sort them by whatever you want. we can actually go in and I'll show you guys. All right, so this scan, option hacker, and my scan went away, but I saved it, so I should be able to open it here. Yep, this is it. So you can save it in here. You can save whatever scan, and then you'll be able to load it, you know, whenever you want. So now I just hit the scan button, and you'll see here all these names are going to show up. All this stuff's going to populate. Okay, it should be actually the stock one, that's why. I did it in the stock one. Yeah, I actually think it's better to do the scan in the stock hacker one than the option hacker one. The option hacker one has like all these Greeks, so you would have to edit the columns. I don't like the way these columns are set up, but you can always edit them however you want. But there's really no difference between the two. If you set your screen up, you know, it's going to give you the same results. So let's see here. Yeah, you see, I mean, it's gonna give you the same. They're both giving me 416, right? But I just like the way that these columns are formatted better. I like this volatility index thing here. Okay, this is very useful. You can sort it by this, and you'll get, you know, the bigger ones towards the top here. But if you sort it by you can sort it by whatever you want. If you sort it by last, you're gonna get the higher price stocks at the top, which, you know, I like trading stocks that are, all things being equal, it's nice to have stocks that, like Regeneron and Chipotle, you know, they're higher priced stocks and they're going to have very big moves. Like you see, Regeneron was up over 3% on Friday, okay? And if you go back and look at last week, I talked a lot about Regeneron, Chipotle, and Under Armour. Right, I've liked Regeneron here for a couple weeks now. I've been bullish on Regeneron since it broke above that 450 level. Okay, and I've been talking about it, and you know, it's gone pretty quickly there from 450 to 480. There's definitely still potential for it to continue. And biotech was strong again on Friday. Like I said, there was rotation into biotech and retail last week. But you know, this is a good little screener here, and so I do it in the stock hacker one. It doesn't really matter which one you do it. It's just, like I said, it just edits the columns differently, which you can change them however you want. But I find the stock hacker one more, I like the way the columns are set up better. I like this volatility index. The EPS I don't really care about. You know, ideally, I would edit these columns to be, every column would be useful to me. EPS, that's not useful to me at all. I don't care about that. Bid ask, don't really need those. All I need is the last, you know. So high, I mean, I don't really need any of these columns. But the volatility index the default columns on this were more useful to me probably just because it's volatility index. And so yeah, but there's really no difference. Like I said, you see the scan is the same exact. You know, it gives you the same exact results. It's just these columns are set up differently. So yeah, this is the scan that I created, and basically this is returning to us 400 names that are interesting names to look to trade options on. Okay, there's enough open interest. The implied vol is 18% or higher. The daily active volume on it's 200,000 or higher. Last price 5 or higher. And shares outstanding low. Okay, low floats. So yeah, and there's a lot of names on here, right? And a lot of these names I've been talking about. iRobot, another really interesting chart. Beautiful chart actually if you look at it, but good name to trade options on. And actually we will be we will be on top of this name going into the July earnings because they had a big gap up from their April report. And, you know, same thing with Win. Win's on, shows up in this scan as well here. Win's still my favorite name. Okay, really, my favorite names right now are Win. I would put Win number 1, Regeneron, Under Armour. Let's see if Under Armour shows up in this scan. No, actually, I don't, actually, it might. It doesn't show up in this scan. I think it doesn't show up in this scan because the shares outstanding, it probably has more. Probably has a higher float. But I do like Under Armour a lot. See Triple D. Okay, this is another 3D printing, right? 3D printing's been heating up recently. Strata Systems and Triple D. So yeah, I mean there's a lot of good names in here to trade options on that we've screened for that are volatile, have low float, and are big movers, okay? You're going to be able to make, if you analyze the chart correctly and you trade with the trend, you should be able to make some pretty nice gains on a lot of these names. Especially now with the market heating up, okay? With us breaking out to new all-time highs and us being in a nice, fresh, bullish trend, hot bull market right now. Most of these names are going to should start trending higher, okay? Most of them. You see Grubhub's on here too. So yeah, I mean this is a great scan, and there's a lot of names on here, okay? There's a lot of names. There's almost too many names. You could thin this out about a lot, right? Because there's no way we're going to be trading 460 names. You could thin this out. I think one of the best ways to thin this out would be open interest. You know, put that up to 5,000 maybe. So that thins it out a lot, right? It goes from 460 to 160. And with open interest being from 2,000 to 5,000, now you have these names are a lot more active, okay? These names have a lot more options traded on them. So, yeah, I mean, you could start with 2,000 and then drill down. Now, the disadvantage to that is we just took out some names that could potentially be pretty attractive names to trade options on, right? Because we just drilled in even more. But still, even if you go to 5,000, you're still getting 160, and then say if you put IV to 25%, I mean that doesn't even really move the needle. It only brings it down 4 more. Let's see, 35%. Wow. So yeah, and that maybe might not be the best to. Implied volatility is that high. If you screen out this, if you screen it out like this, yeah, implied volatility is great to be high, right? It's good for options traders, and if you catch a move in the right direction, you're going to make big gains. But the double-edged sword to that is if you're scanning for stocks with the implied volatility 55 or higher, if you get a move against you, you're going to get obliterated too. So there is kind of a sweet spot, you know. Sometimes maybe 55 is too high for some people, you know. Maybe if you screen 55, that's the stock's moving too much. But you want to make sure, you know, I think 20% is a good. I think 20%, excuse me, I think 20% is a good number to use. So yeah, and you see just by changing this from 2,000 to 5,000, that brought that down by like 300 stocks. But yeah, I mean Thinkorswim's a great tool, and there's a lot of things you can do on the platform. We'll go here. I'll show you guys my options chain and how I've customized it. So you see here layout. Okay, I chose this one, implied vol, probability, out of the money, and delta, and then I kind of customized it as well. I added some more columns, which you can do in somewhere in here. Where was it? Where is it in here? Customize. Okay, so it's right. Yeah, it's right in here. So I started with, I started with this one, right? And then I just added a couple things. But basically, the way I have my chain right now is I like it like this. The only other two things I think are important to see too is the high and the low. I think you should always be, you want to see the high and the low of the day on all of them. Just so you have an idea of how your entry is. Right, you definitely don't want to be buying an option when it's trading towards the high of the day. Most of the time. Just because you're likely going to be able to get in, obviously, at a better entry. Unless the market's really trending strongly. So yeah, delta, implied volatility, open interest, volume, theta, probability out of the money, high and low. This is, this is probably my ideal way that I would have my option chain set up, so I could see all this stuff. And yeah, I mean, volume, open interest is definitely a lot more important than volume. Now, the reason why volume can be kind of interesting is because if you see a very large, abnormal volume number, that could be, some kind of indicator. But I can probably take volume out of here. Don't really care about volume as much. So yeah, let's see if anyone has any questions. So Wayne asks, when buying options 30 days before earnings with low IV with one strike in the money, how would you know to buy a call or put? Because the stock can go in either direction before, and it could also go in either direction after earnings as well. Well, you would know that, Wayne, by looking at the chart of the stock and trading with the trend. And really, to be quite honest, nobody knows what way a stock's going to move after their earnings report. It's really just an educated bet and kind of an educated gamble, which is why you should never put a lot of money into an earnings trade, right? Because nobody knows what ways the stock's going to move. It's really just a bet. But you would be buying. You should be trading with the trend, right? The market's in an uptrend. We're in a nice bullish trend. We just recently broke above 2,400 and we're trending higher. So you should be looking to buy calls on stocks that have nice bullish setups. And so, yeah, and you probably don't want. You don't want to. You say low IV. I think it's better to be looking for stocks with higher IV. Low IV is, so the option's going to be less expensive, but you're just going to get less of a move. Okay, I'm not interested in trading stocks with low IV at all. But one strike in the money, 50 plus delta, that's important. So yeah, I mean that's a question I see. Hope those answers helped you out. that is, does anyone have any other questions? If not, we're going to end this session. I'll just put this slide up real quick. I want everyone to, I always want to drive this home. Like I said, 3% max in weeklies, 3% greater than 7, less than 30, 5%, 30 plus. That's an 11% total. You will stay in the game in the long run if you manage your money like this. And if you go out 30 plus days, you can assume you're only risking half of whatever you put on, right? So you can actually put 10% into 30 plus days and assume you're only risking half. Okay? Whereas these other two, you need to assume that whatever you're putting into them, you're risking. Whereas if you go out 30 plus days, you only need to assume you're risking about half of what you're putting into the trade. Okay? And so even if you do 10 and somehow you lose the full 10, you're still losing 16%, which you can bounce back from pretty easy. But you shouldn't be if you're out 30 plus days, it's hard to lose everything you put into the trade. A lot harder to lose that. Okay. So yeah, let's see. Wayne asks, do we teach anything on selling options? We do we did do a video on credit spreads a while back. So we do have a video like that on our channel. Now, to sell options, if you're just asking to sell options outright, you need a big portfolio to sell options. You need a lot of margin, right? If you're just going to sell options. Yeah, I mean, the IV's always going to rise into earnings, and that is a strategy that we do have a strategy that I started teaching last quarter. It's an earnings strangle where you buy both the strikes about 2 to 3 weeks in advance of the earnings report. Okay, you buy a delta neutral strangle, meaning your deltas are the same on both the calls and the puts. So you buy a delta neutral strangle, and it's designed to profit from the rise in implied volatility, and you sell out of the strangle the day of or the day before the earnings report when IV is at its highest, and you can profit from that. So that's a strategy that I've taught, and that I will continue to teach as earnings reports get closer and closer. I'll probably bring that strategy up again here towards the 3rd week in June. I think is a good time to talk about that again. That's probably a decent time to be, like, for a stock like Netflix, right? The 3rd or last week in June is a good time to be putting on a delta neutral strangle if you want to use that strategy to profit from the rise in IV and Netflix. So yeah, when you said low IV, though, I assumed you meant like stocks with lower implied volatility. Of course, the way IV works is that all stocks implied volatility is lower, 30 days before their earnings report. IV is always rising into that. But if you're in a position, Wayne, where you can sell, where you have enough, your account's big enough that you have enough margin to be able to outright sell options, then yeah, there's a lot of great things you can do with that, and we can definitely help you with that. But we haven't seen a lot of interest in that yet. But that's something we can definitely help you with. I'm actually trying to figure out a better way that I can get more involved with all of our members. I'm in the chat every day for an hour, but I really want to get to know everybody. So I've offered a free, 30-minute consulting where I just really want to get to know everybody. I've gotten a couple emails about that. I'm gonna wait, and ideally I would be able to do it with every single person at the San Relay Exchange. Okay, we'd be able to Skype for 30 minutes. I'd be able to get to know you all. I'd be able to get a better idea of kind of your account size, right? I don't need the exact number, but I'd like to know if you're subject to the pattern day trading rule or not, right? I think that is good to know. And then I can better help each and every one of you realize your goals better and kind of have a better idea of where everybody is. So you guys can email this email here, because I do want to give everybody some free time where we can just go over things. So yeah, you can, if you email me, I'm trying to get to, like I said, I'm trying to get to know everybody, figure out a better way to communicate with everybody, and the best way that we can help everybody. Yeah, Wayne, the thing about the option selling videos is that there's not really a lot of people interested in that. Now, if you're talking about credit spreads, which is completely different than just selling options naked. If you're talking about credit spreads, we have a couple videos on this channel about credit spreads. Just outright selling options, you need like I said, you need a big account to be able to do that, and in any sizable way to be able to actually like create a decent income for yourself. But yeah, I mean, that's definitely a great strategy for people with bigger portfolios. So if we see enough interest in that, we can definitely make a video and talk about that for sure. And I can, if you set up a consulting thing with me, which I would love to do, like I said, I want to do it with everybody and help everybody and just get to know everybody better. So I can kind of personalize more, how I try to help everybody. Yeah, iron condors and iron butterflies, I mean, that's still different than just selling options, right? An iron condor is just a credit spread in both directions, pretty much. So yeah, I mean, those types of strategies we can talk about, like iron condors and iron butterflies and all that stuff, which an iron condor isn't a bad strategy to use right now in a low volatility environment. It's not something we've focused on much because most of our strategy is just focusing on trading options, right? We're just swing trading options, so we're either doing spreads, just debit spreads, or just buying a call or put outright. That's most of what we do. But if there's enough interest in iron condors and iron butterflies, and strangle straddles, we can talk more about it. I have talked in the past about earning strangles, attempting to profit from the rise in implied volatility. Delta neutral strangles is a good strategy to going into earnings reports, where it's a non-directional trade, meaning doesn't matter what direction the stock moves, okay? Which is it's a good thing to try to use. Now, you're not going to make huge gains from it, but you're also not going to lose that much either, so it's lower risk. But yeah, we can figure out how to do all that. Like I said, I want to do like a Skype. I would love to be able to Skype with everyone and help everyone, okay? As part of your membership of our site, the Santa Rayla Exchange. I want to be able to get to know everybody better. And yeah, so you guys can email me and we'll figure out. I want to give everybody like a free 30-minute consultation, just get to know you guys better, get an understanding of your account size and all that stuff. So that way at the Santa Rayla Exchange, we can help you, or I can help you more effectively. Because my job is I want to coach you guys, mentor you guys, help you guys become the best trading versions of yourselves. Okay? And then to be able to do that, I need to know more about everybody than I do right now. But I know I can do that. I know one of my passions and one of the things I love is self-improvement and continuing to get better at something, right? I'm very passionate about the process of self-improvement, and so I know that anybody that's open to that, I can help them as well. And I just love the process of coaching and mentoring and helping people. So But if nobody has any other questions, we're going to end this session. Yeah, I mean, like I said, the big thing for this week is Comey. He's testifying on Thursday, June 8th at 10 Eastern Standard Time. So we need to be aware of that, okay? Don't be loaded up in weeklies Wednesday night, please. And yeah, that's going to be it for today. Everybody enjoy the rest of your Sunday, and I will see everybody in chat tomorrow. And also, as well, if you like this video, and check out the link to our site in the description of the video. We offer a free month to all new members. We do educational videos. We have a live chat during the day, and we send out, trade alerts, trade feeds, and all types of stuff about what we think is going on in the market. So, yeah, feel free to follow that link. Check out our site. Take advantage of that free month. And subscribe to our channel and click that little bell thing next to the channel. And every time we go live or we put out a video, you'll get a notification. So that should help too, to be able to know, when we're going live. So, all right, guys, everybody enjoy the rest of your Sunday.